Now it is time to bust some myths on fixed indexed annuities and see if there's any truth behind these myths. So I use the word myth because many of them are not supported by facts. The necessity for a fixed annuity, such as a fixed indexed annuity for your retirement income planning needs, is a fact-based analysis and should not be based on unsupported speculation. So you know me, I'm going to provide you the facts so that you can make a better decision about whether a fixed indexed annuity is the right fit for your retirement portfolio. So let me help you demystify some of the common myths that you may have heard of. Hi, my name is Darlene Hartman. I'm a CPA and founder of D. Hartman Consulting, LLC. For the best retirement annuity advice, subscribe to my YouTube channel and hit that notification bell so that you can receive notices anytime I post a new video. Annuities, good or bad? Now, I actually did a video on this topic, so be sure to check out my video titled, Are There Bad Annuities? But instead of asking yourself if there are bad annuities, what I want you to ask yourself is, what are your goals for retirement? What are your needs in retirement? And what is your risk tolerance to market volatility? Then I want you to arm yourself with the right questions to ask a salesperson who's pitching you a fixed indexed annuity to ensure that they're working in your best interest rather than their own self-interest. As I've mentioned before, one size does not fit all. Some people, a fixed annuity may not be the right fit for their retirement portfolio, while others, it's dependent on what their needs are, which fixed annuity is the right fit for them. And if it is a fixed indexed annuity, be sure to pick the features that help you meet your retirement goals, because many of those features are going to be pitched and they're going to sound great, but you may not need them. And by bundling lots of features into one product, you're first of all increasing the cost of that product. So your annual fees are going to go up. And just so you know, the more features you add to your fixed indexed annuity, the higher the commission to the salesperson. But also, I want you to keep in mind that there's a product on the market where they combine moisturizer with sunscreen. And by bundling those two together, they're actually making both of them less effective. So I want you to keep that in mind. Many of those features may be great for you, but is there another way to accomplish that retirement goal rather than making your fixed indexed annuity more expensive? Now, you have many tools in your retirement tool belt to choose from. Some will perform better than others, some even much better than others. But which ones? And when is one a better choice than another? It's very unpredictable, isn't it? Sorry, I still don't have that crystal ball, so I can't give you any answers. And at what cost, including possibly losing your principal in that investment? Now, one thing that I can tell you is that there is one tool that can provide you guaranteed income, even lifetime income, and ensure you 100% principal protection, and that would be a fixed indexed annuity. And the reason why you can get those guarantees is because it's not an investment in the market, but rather it is a contractual guarantee with an insurance company. And you can have a fixed indexed annuity, depending on what type of features you add to it, at a minimal cost compared to the cost of other investments. I did a video on other reliable sources of income, so be sure to check out my video titled Reliable Sources of Income or Not, and see how reliable those alternative sources of income are, especially in the midst of a global pandemic. There is a common misconception that a fixed annuity, especially a fixed indexed annuity, can be quite expensive. But as compared to what? Have you looked at the cumulative costs for the other tools in your retirement tool belt? In my videos on fixed annuity pros and cons, I mentioned that most fixed annuities have no upfront charges and no annual fees. So that's true for a fixed indexed annuity also, unless you're adding features to your fixed indexed annuity. So the more features you add, the more cost you're going to incur on your fixed indexed annuity. So be sure those features do meet your retirement needs before adding them to your fixed indexed annuity. Now, with respect to an annuity surrender charge, yes, that can be quite expensive. So what an annuity surrender charge is if you exit your fixed indexed annuity contract in the early years of the contract, then you're going to have to pay a fee that is based off of a percentage of the contract value. That percentage does decrease with each passing year of the fixed indexed annuity contract. Now, I've mentioned before that you have to know that a deferred annuity is what you need for your retirement portfolio before you sign that contract. I'm also going to note that it's always good to have an alternative plan for emergencies rather than relying on your fixed indexed annuity to provide you funding for your emergencies. But keep in mind that most insurance companies, but not all, do offer the ability for you to withdraw 10% annually, penalty-free and free of any cost. Leave me a comment in the section below and let me know which myth you would like busted about a fixed indexed annuity. Also, if you're enjoying this video, be sure to give me a thumbs up, subscribe to my YouTube channel, and hit that notification bell so that you can receive notices anytime I post a new video. So you say that the returns on a fixed index annuity are not very attractive. As compared to what though? So if you're looking at the gross returns of the S&P 500 in an up market, you're exactly correct. A fixed indexed annuity returns are not going to be as attractive as market investments. But remember what a fixed indexed annuity provides you. It's providing you guaranteed income, money that you cannot outlive if a lifetime income annuity. And it's also providing you those invaluable mortality credits, which you cannot get from a market investment. But let's look at what happens when market downturns occur. Now, with respect to your fixed indexed annuity, because there's a 0% floor, that means there's no change in value on your fixed indexed annuity in the midst of market downturns. Now, with respect to your market investments, if it's a pretty big market downturns, it could take you several years to recoup the value of your market investments that you lost amidst the market downturns. And what about cost? So if you have a managed account with a financial advisor where your market investments are housed, then you're paying an annual asset management fee. And you're even paying that fee in the midst of market downturns. So it doesn't matter what the market is doing, you're still going to pay that annual asset management fee. Now, with respect to a fixed indexed annuity, I mentioned that you typically don't have any upfront or annual charges, but you do have extra fees associated with features if you add additional features to your fixed indexed annuity. And there is the possibility for a surrender charge if you exit that fixed indexed annuity in the early years. But you need to compare the cost between the two to see that even with a surrender charge, if that cost is comparable or even exceeds the amount of cost that you're going to pay on your managed account for your market investments with a financial advisor. So when you're comparing returns for a fixed indexed annuity versus market investments, be sure to look at the net returns. Be sure to look at what those returns are in the midst of market downturns so that you can make an informed decision about whether that fixed indexed annuity is the right fit for you. Now, with respect to the myth that a fixed indexed annuity is complicated, there is actually some truth behind that myth. But when you consider that a fixed indexed annuity provides you downside protection in the midst of market downturns, thereby ensuring you 100% principal protection, in addition to providing you a limited amount of upside potential from the market, yeah, it can be quite complicated. And that phone book sized fixed indexed annuity contract is a dead giveaway with how complicated it can be. But that's why you need a qualified salesperson who is knowledgeable in all the features of a fixed indexed annuity to help you convert those myths into facts. Keep in mind that a myth do not ensure that you reach your retirement goals, but a knowledgeable salesperson on a fixed indexed annuity can. If you're interested in obtaining a fixed indexed annuity in your retirement portfolio, for the guaranteed income benefits it can provide you, be sure to click the link below to apply to become my client. Also, if you're enjoying this video, be sure to give me a thumbs up, subscribe to my YouTube channel, and share it with your family and friends. Thank you for watching. Let's get the conversation started on how you can live your best retirement while not outliving your money.